Okay, hi there guys. Bit of a slow start to the session, sorry about that. Bit delayed, I think my brain's still in holiday mode. Just let me know if you can hear me, who's in, and we'll get up and running. Hope we're all well, hope we're all actually safe and well, to be honest. Those fires whipping around the country. All right. Okay, let's just get up and running and then we can catch up with everything as we go. Welcome back to our first live stream for the year, 2020, the new year. I hope we're all doing well. Hope we've had a good break. No video. Uh, Audio only. Yeah, it's coming through. It looks like it's coming through now. It's just a picture on there. Welcome back 2020. Can you see that there, Vin? See my mouse hovering around on that. So welcome back. Hope we're all doing well. Ready for a big year. Big year, probably another like last year. Maybe just press, if you're not getting the video, I think you can get in the bottom right-hand corner and just click on settings, go to quality, put 720p. Yeah. I got a feeling I could see it through the YouTube here. You're on the right channel, I'm guessing. Anyway, let me know how you go. I'll probably see you jump on and jump off again. All right, welcome back, guys. So we've got markets were down a bit between was it Christmas and New Year period. Got a few more headwinds to face this year, I'm guessing. With was it US and Iran? I think things are going to kick off and get a bit sticky there. Could be interesting to see how that goes and see what sort of reaction from the markets, whether it's I take that as a bit of an opportunity just to lock away some gains because they're uncertain what's happening. Gold kicked off pretty hard. It was last night, which was, I guess, expected. That sort of run to safe haven. But if anyone's looked at the actual opens on the US markets, they gapped down on the open, but they pretty much that was the low of the session, and they rallied from there. So that was got the Dow open gap down in the open on the index anyway. From the news and then pushed up from the open and sort of didn't finish on its highs, but finished up off the lows. Same with the S&P and the Nasdaq. DAX was down quite a bit, but the FTSE wasn't so bad. They pretty much ended with about 18 points up, I think, for the session. So it was a bit of a mixed bag. We've reacted, I think, probably overshot the mark a bit on the open today. And again, I think that's more of a case of people just locking away some gains and nervousness. The bears coming in on the open because of the news over the weekend, what's happened, and just locking away. And the market has actually bounced 20 off the lows. I think we're down about 30 or so at the moment. Let's just minimise that. How'd you go there, Vin? Ah, good. So we're down 31 points at the moment. It was down about 60 at one stage, I think it was. So we had lows of, what's that? Is that low? 67, 66.71. So 30 points off those lows, thereabouts. So yeah, it was a bit of a rough open, which has caught a few people out. I think just squeezed out a few people, but it'd be interesting to see how we go from here. We'll cover over today. I'm just going to go over the major indices. It's a bit of a recap and a bit of a plan of what we could be looking for. Crude's kicked off last night, which was, I guess, not unexpected, but yeah, it's going to be interesting one to see how that plays out. But that was going well. We'll take a look at those charts. Let me just change something here. We'll just go over a few bits and pieces just to get a head around what we could be expecting this year. Now you should see the chart change. Should just maximise to the right hand side. I've got the right chart. Let me just see. There we go. All right, so we're going to go over the major markets today. Just a bit of a recap. I mean, probably just as much for me as anyone else. I think I was just a bit fuzzy starting today. I was looking at it last night thinking, oh, where's my levels again? Too much Christmas cheer. I think, for me. So just getting back in the routine, getting ourselves reset. So what I always like to do, I don't know if anyone else does, it's probably not a bad idea, especially with, we have TradingView I use quite a lot now for charting. And what I like to do is just go and reset the charts, for instance. So take off all the levels, clean them out, and then just reset and redo them, because it's good just to start from scratch to see if there's anything you missed. Otherwise, you could have stale levels on there. Levels are not, they're not in play anymore. So it's a good idea just to go through and reset those charts. I've done a bit of that. Let me just change it to the daily. Bit of that last night. Put out an alert last night just on a couple of these major markets that we can look at. So we'll go over that a bit today. Feel free to ask any questions as you go, or put up any ideas you might be looking at. Crude's playing out well. Gold's kicked off. But I mean, if you're not involved in gold just yet, it might be a bit tough. Some of the gold stocks themselves, we'll probably have a look at those as well on the Aussie market. They're not, technically they don't look that great. They have kicked up. Obviously, there's a few that have kicked on, looking good, but a few that, I mean, it's not across the board. Good strength as we would expect today on the opening gold stocks because of what's happened Friday night. 27 bucks. It's even rallied harder now, hasn't it? Where's gold at the moment? Spot gold. It's rocketing actually. It's really just blasted through. So this is sort of the level I was looking at on gold, 1553. It's just taken out that today. But I mean, for me personally, I wouldn't be buying gold stocks here because it's already gone. If you're late to the party, I wouldn't want to be on it. I'd be waiting for more. There's going to be some profit taken sooner or later. And what if it doesn't kick off that much? It's all depending on what happens between the US and Iran. I don't know. There's some news that popped up now. Trump spouting something again about the US troops leaving Iraq. So, they're getting involved. So I think there's a few things to work through. I don't think Iran's going to really do anything too stupid. From what I read somewhere, he's already probably in the pool a bit with some of the people. Well, some of the, what would you say, the community, or not really community, but the people in Iran, Iranians, because of what he's done, and there's been some really rough things that they've done. So that I think he doesn't want to step on their toes too much, but also doesn't want to look weak against the US. So it's going to be a bit of a balancing act for them. I mean, they're not going to take on the US, pretty stupid too. But if they don't want to kick off anymore and you wouldn't take much to trigger, Trump to start diving in with more troops and stuff. And we've got elections coming up too, and a lot of been saying whether this is an election ploy. There's even tweets he's put out about Obama back in, this is a few years ago, saying coming into the elections, he'd probably kick off a war with Iran. Now he's gone and done the exact same thing potentially. So yeah, a lot of politics going on. So we'll have to see how that plays out in the markets. I would suggest that gold's kicked on. I mean, for me, don't want to go near it. If it goes up, I'll have to just bite the bullet and suck it up. I missed out on a trade because it has gone quite hard already. You would expect with a rally, from 1478, nearly $100 rally in gold over that period. And so when did that start to kick off? Say that was kicking off on the 23rd, a couple of days before Chrissy, gold's taken off, spiked through 1553. If you want to be jumping on board now, you may be facing a bit of a pullback because there's going to be profit taking sooner or later. So just be wary of that if you're looking at gold. We'll look at some gold stocks as well. What we might do is just go through the markets. Well, we start up with gold then. So you can see, go back to a weekly. It's a bullish market, and it's got a lot of room to move off the weekly. Let me just get that out of the way. A lot of room to move up and start targeting those 1890 levels, or maybe $1,900. These highs, you got a little bit of a resistance zone around, say, 1800. So it's got a lot of room to move on the upside over the longer term. And this sort of structure looks quite conducive to a move up. And it looks like this is enough, that contraction we've been looking at off the highs of 1553 down to 1450, say, and it's lifted off there recently. You just wouldn't mind a bit of heat coming out of the market. It's seen a bit of a pullback and seen how the buyers react to that pullback. If they come and soak up the pressure, then yeah, it's worth getting in. But I wouldn't want to get in now, find out nothing happens in Iran, and gold will collapse because everyone will be racing for the door to exit and lock in some gains as quick as possible. If that's the case, if it doesn't kick off. But so what you want to see really is something like this. I'd rather see a bit of a pullback, constructive pullback, where you can see that this action here, this kind of action where you get to minor lower highs, but it doesn't take any key level on gold on the move up. It's more contractive and it's more conducive to people holding on to long positions and getting set to build a new leg higher, as opposed to just, this thing just collapsing back down on itself, back down to say 1450 or so. It is a safe haven at the moment. So like I said, if things kick off a bit more, you could probably see that running further and harder. But again, it doesn't matter what's happening, people will be looking to lock in gains sooner or later. And it's just a matter of where. I thought maybe we might get some sort of reaction around 1553, but they blasted through that this morning on the open of the Asian session. So, which, yeah, probably should have thought about it a bit clearer. Aussie gold's a bit different story. Let's just see what Aussie gold's doing. It's got a couple of resistance zones. I'm looking at more to push up towards 2296 or 2300 before we get some sort of reaction lower, potentially anyway. So that's the gold Aussie gold in terms of Aussie dollars. So we've got the market. It looks great. I mean, it's got a nice little base built at 2110. It's minor double bottom, but I'd rather see. I mean, double bottoms come in all shapes and sizes. I just say that's a retest, not really a double bottom. I'd rather see a double bottom. Let me just draw it up. I think there's two different things to worry about here while we're on the topic. So you get double bottom, double top, same sort of thing. So if you've got, so the market's pushed up. Let me just take that back a step. So that's our last anchor. And if you get it pushing down through that anchor, so it breaks the anchor, breaks the uptrend, and this trend could have been, going for a while. So it breaks that trend, and then that's the anchor to the uptrend. It might go push up. I'll talk about it actually, a double top. That's a strong double top. If it starts failing off here and you get this lower high, that's the most important thing to look out for. You've got to look out for things like where it breaks the anchor there and it fails again for the second time, as opposed to, it's a big difference, as opposed to not breaking the anchor. Let me just get rid of that. Sorry, can you hear me, guys, now? I just had a phone call come through, so got rid of them now. See how we go. All right, so we've got what I was just talking about. So when you break the anchor, so this is what I would term an anchor. Okay, so that's the anchor to the uptrend. You break it, you go and retest and then fail. So when you fail, and if you flip this over for a double bottom, same sort of thing, market's coming down, it bounces, had a good correction, it corrects the leg down and then retests that zone. It's a lot stronger than something like this. That's a really horrible drawing. It's a lot stronger than something like this that fails and it hasn't broken the anchor. Because people might see that start to sell and it turns around, you might retest there or go a bit lower and then boom, straight back up and just clean them up. It's more of a setup. That's more of a short squeeze play than actually something to worry about on the downside if you're long. Because it's all about anchors and where you put your swing levels. Other people call it, I call them anchors. So this is your trend up. The trend up hasn't broken. It's come down. It's retested, high, retested the high. People get the lower high and go, oh, let's bail. But that's a different scenario to that once it's broken the anchor. That's a lot stronger setup on the short side than this is. Okay, so I thought I'd just touch on that. I don't know why I'd started touching that, but that's what I'm talking about there. That this move down hasn't really broken the anchor. So I wouldn't turn that as a double bottom and just to retest that 210 and it started to hold. Found some buyers. You're still looking for that higher low once it breaks out of that contraction. The contraction is lower. Once you get this zone here, that was a good little buying opportunity. You would have really been looking through something in here as a buying opportunity in there. So that's gold is, it's extended hard and fast. You would expect potentially, I guess that could be, it's going to be linked to gold as well. What happens with gold up at sort of these 1574, 75 zone to whether the Aussie gold actually, we might see some profit taken up here at say 2300 at these highs. It's just blasted through 2259. I didn't expect that to hold today, which it didn't. It's just kicked on through there, but it's still a bit below, so $40 below the 2300 mark. So it'll be interesting to see how we go in the way of profit taking. I do expect some profit taking if we get this kind of action, and I like to see, a bit of a pullback, lower high pullback, and that's going to squeeze out. As soon as you get that lower high come into play, it's just what we said with this kind of setup. It's there to squeeze people out, squeeze them out, reset, and go again, and then they'll be chasing the market back up again. If we can get this kind of price action, if we get that, I think that's more conducive to really good, strong move up. Let's just see what it looks like on the weekly. We'll continue move up anyway for the Aussie gold. So I think that could link up with a move in gold. I don't know, 1,800, $1,900. It could really kick on. So there is potential. We're looking at the structure for it to kick on, but look at on the daily, we're a bit stretched up here. So for me, we may get that sort of profit taking. It's going to run into a bit of resistance up there. There's always going to be people buying it on the move up. But we'll see what happens on that. It's just a matter of keeping an eye on it. I'm not saying gold's not bullish. I just would be looking for an entry, and I wouldn't be buying on this move here, when it's extended, because for risk, it has to be way down at 2150. I'm not willing to put my risk there. I would rather put my risk on a bit of a correction, get the high low to play off, and so you can work your risk just below the high low. If you can't do that and you've got too wide a risk, it's just not worth chucking money at it. Yeah, you might miss a couple of trades, but there's always going to be trades around. It's always trades around. So it's all about managing your risk. So that's gold. I think gold is probably, like I said, just due for a bit of a pullback there. Let's just take a look at crude oil. Is another big mover last night. I think crude's really spent a lot of time putting in this base. Let's just get rid of that. So this is your daily chart. Let's take a look at a weekly, just longer term. That looks good. All up, that looks pretty good. There's probably one thing I've just noticed there. Let's just see what. Just want to change that. It's all right. Bear with me a bit there, guys. So that's your weekly chart. You can see that's your GFC, is it? That was through the GFC. Got smashed down here. Yeah, through the GFC. It's rebounded, got back up to about 110 bucks, then failed again. Washed out that low, and that's the key thing. It cleaned it up, and now it's spent some time at 42, 43, $44, building this high low. It retested again, and then we built this inside high low at 51.35. So if you just bear that in mind, 51.35, that's a good launching pad for me, looking for it to potential push to 75 to test that 75 zone. Even if it doesn't play out, like we've got this resistance zone coming through here, if it still stays within the terms of that sort of longer term contraction lower, we still got potentially 10 bucks in that, a 10 buck rally, 10, 12 buck rally, if that's what's going to play out. But this structure looks good. You can see that move down was quite hard. You got a good rally up over a long period of time, got smashed back down to 42, reacted up, got smashed down again, but then it got soaked up. Each time it touched down again around 51 bucks, it got soaked up. And now this rally here, if we can get through 66, these highs at 66.50, I think we have to lead to a push to 75. So there could be a lot of good plays. Daniel, a lot of good plays on crude coming up. We just keep an eye on some of those stocks, even crude itself, crude futures. If anyone trades crude futures, using some options. You might trade this on the long side with buying some calls. I wouldn't suggest selling some puts to earn the premium, but it could be a really good market for option. Well, crude is a massively good market, I think. I've traded this way back with this rally. If it's data loaded, I traded that for quite a few years, actually, probably a couple of years. This rally up here, just selling calls. So I probably didn't attack it. It could have just bought some calls at the start and kept rolling them over and kept locking in those gains. But it was a great opportunity, high volatility, selling some options as opposed to just trading the futures outright, because it was high volatility. You needed a massive stop loss and you're risking a lot with your futures, and you can just get chopped apart. Whereas trading options was really good, because options are one of the biggest inputs to the price of options. Higher prices is fed in by higher volatility. The higher the volatility, the better price you're going to get. So, and you get more opportunity to close out. So all I was doing is selling the same calls at whatever level, buying them back, selling them at 45 cents, buying them back at 25 cents, the same one. And when it popped back up again, the same option, exactly the same, say 35 cents, buying it back at 25 again, and just rinsing and repeat. It's because the volatility was there. So that could be, I'm not saying that that's a market that could kick off, but there is opportunity with not trading the commodity or anything outright, but using some options as well. Other ways to trade it anyway, because I mean, you might have to take too big a risk with the CFD or with futures market if the volatility starts to kick off. But another way to approach it is with options. I don't think there's any other way that I would tackle it, but it's a massive options market too on crude. So yeah, I do see that potential. Maybe we get some sort of push up to test these highs. This is just an inside level at 63.78, and it looks like it's just getting through that now anyway. Just pushing up through there. So I wouldn't be surprised if we do extend to 66, 67 dollars. Bit of a reaction lower, and it'll be interesting to see how that reaction, whether it's soaked up. So it's a reaction we're interested in, not so much buying it now, expecting to go up, because I mean, technically, if you're buying this in the short term, your stop's way down at 60 bucks. Now it's a $4 or $5 stop. I'm not happy with that. Wouldn't trade it that way. I would be drilling down anyway on the smaller time frames. But if you're just trading off this daily, a $5 risk level, percentage terms quite large, isn't it? I mean, if you're trading off this bigger time frame, your stop's way down here. So I would be more inclined to see it's going to kick on, and if it does kick on, don't fret. There's going to be a pullback because everyone at different stages take for different reasons is going to be locking away some gains, booking that, and when you get that book, it might trickle down to a few different buyers who start to look at booking away or locking away some gains. You get the pullback, and then you want to see how they react to that pullback. If there's no one standing in the way of a pullback, it's not strength, it's weakness, and that's what you want to be seeing. If there's this sort of, this market got smashed down and then got soaked up back again at 51. It got soaked up quite a few times, spiked into it quite hard. So that would have been fear driven. People were, I can't think of another way to say it, but crapping themselves. The market spiked down into that support zone and it bounces quite hard. It's because there is traders willing to soak it up down there. Now, if they're not there, that's just going to blast through. It'll probably stall, sit down there below, stall, and then you'll find anyone that's waiting for a bounce off that level is now going to get concerned because there's no buyers willing to jump in to soak up that selling pressure. And then they start to bail, and that's where you get that extended move down. It really starts to capitulate. All right. So what I'll be doing, I mean, with crude is just seeing what happens. I expect it to kick on, see what happens on the first sort of pullback from here, and I would like to see a constructive pullback, as in the higher it goes. If you can just see what I'm talking about, when it's extended like that, a couple of big green candles, and we might get another one that pushes up to 66, 67. I want to see sort of this two-legged move down, because I think that's going to clean out a few traders. You get the lower high coming into play, but again, like we just said before, where is it? With this, it doesn't break an anchor, and if it can't break an anchor, which probably at the moment the anchor, that minor anchor to the uptrend is around 60 bucks, 60 and a half. If it just sort of pulls back and holds above there, and you get these two legs, it's enough to squeeze out a lot of these buyers that bought it late. Squeeze it out, and if it starts to get soaked up, ideally if we can get a high low coming into play here, then bang, up we go. And it's worth, because then you know exactly where you want to place your risk, or you know where you should be placing your risk, and it's minimal with the opportunity that's going to extend up and through 67 and potentially look to new highs. There's no reason why this is your initial leg up. We've got enough base that's built through 51. You extend that leg up looking to 675. So I think there is potential in crude. So we'll keep an eye on some of the crude stocks as well. If anyone got any crude stocks, the only reason I think we've got is, well, not oil stocks, but energy. We've got Crude at the moment, KAR on the ASX, which has kicked off today, which is going well. We haven't taken a partial on that, I don't think, just yet. No, but hopefully it's up about 11% at the moment. We'll see if we can, wouldn't mind locking something away now, above 10%. We've got it at 112 and a half. So this is, I'll go to here. Let me just do this. KAR, yeah, 122. I got hit 125 before. Pretty choppy, but that's, on the rise. That'd be good if they can kick on. I wouldn't mind seeing that spike. I'd be absolutely wrapped if we see that spike. So I want to see what happens around that 130. If we can push up to 130, maybe we'll lock away some gains there. But we've tightened the stop up. We're not risking much on this one anymore. Probably a cent or so at the moment. So that's our our only energy play at the moment. I haven't looked at it today at the moment, and so we'll go through later on and just look at some of those energy stocks, see what they're looking like technically. So that's oil. I think oil's on the rise. Gold, it could be opportunity in gold as well. Look at the dollar index, US dollar index. Been watching this for a while, and this is a dollar index futures. It'd be interesting to see. I mean, we've had these legs down. It did sort of break the bottom end of that channel. Might be clearer if I do this. Uh, you can see that channel that's been in place. We've broken down out of that. I thought this level here at around, what's that? Oh, I thought it was going to hold back. What day is that actually? 11th of December. And it's broken down. We just lower high come into play, press down a bit more. So yeah, whether the US dollar is going to start to find a bit of pressure longer term, which probably comes into play. You got this. I mean, I'm not a big fan of head and shoulders and all that sort of stuff, but if that's another shoulder, that's your head and that's your shoulder here, we could be looking at a big pullback on the dollar, which would be quite bullish for your commodities, wouldn't it? You know, in terms of US dollars and gold too. I mean, the US dollar sinks, you got gold just going to go absolutely rocket high, you would expect. OSH, no worries, we'll get into some of those. So that's the US dollar. So it's important to keep an eye on that too, I think. So the key markets I'll be watching is obviously what's happening with the US stocks and the indices. You got crude, you got gold, and looking at the obviously the US dollar also, because everything's linked to that at the moment. Aussie dollar had a good run up. You know, it's got jammed up in the Christmas period, which is not unusual for markets to have a bit of a run on light volumes. Aussie went, Euro went, pound. I don't know if it went as well. What date's that? It's the 13th of December. There's a little bit of a push up between Chrissy and New Year. So there's a few markets that got ramped up a bit between that Christmas and New Year period, which are coming under pressure a bit now. So we'll just go over now, just have a quick look at what the US is doing. This is a channel I know that I'm just looking on Twitter. There's a few people watching it and looking at it. We're at the top end of that channel. Just broken up and out of it doesn't mean too much. I mean, that's not an exact science. Your levels, I like putting them on the exact low, and I don't like to. This is another thing. People tend to draw, I think, say their support line is like this. If you can see what I'm saying, it goes not potentially the closes or the lows, the close, or the low of the day or the open or this sort of stuff. They don't really take into account the wick. I mean, that's good if you don't put it, well, if you don't put too much emphasis on it. But I find that hard. I just always find it better to touch the exact low, because to me, if it's traded down there, if it's cleaned up some people with the way it stops, then it's important to note. You know, it's not really the closing price. For me, I always like to look at the lows and the highs for my levels. But anyway, in saying that, it has just popped out through the highs here on the S&P. It is extended, but there's no reason why it can't just, you know, creep up, follow like it has here, you know, creep up for the next month or so, and then, you know, get smashed down the bottom end of the channel, and then creep up again, you know, rally again, and then creep, because a lot of the indices will bounce quite hard and then chop around the highs. You know, you get this kind of extended action. This action here has been a bit more bullish, but you can see what I'm saying. It's just sort of creeps, and then you get a sharper sell-off, good bounce. But either way, the S&P is in an uptrend, and that was the Friday's action. If you just go down to the 30-minute, that's what I was saying. It gapped down, and that was the low of the day. You know, it touched on the low of the day, just below the open, and then never looked back. It was getting a bit heavy. Of course, there's going to be that uncertainty, but it looks like the bulls were still happy to come out and start supporting that market. And overall, longer term, look at the Dow's the same sort of action. I think the Nasdaq is pretty much the same, gaps down, and that was the low of the day. But if you look at the daily, they're still well and truly entrenched in an uptrend. Yeah, you could say they're extended, but you're not selling because the market's extended, because it can get more extended. You're selling when you got a lower high, a serious lower high come to play, or you've got anchors to the uptrend broken, all that sort of stuff. You're not trying to guess where it's going to turn, where the high is, just because it's the top end of a channel, like we're just talking about on this on the S&P. So yeah, what I'm saying, I mean, there's no, until something potentially kicks off a bit harder with the US and Iran. I mean, we might see that the market bounces a couple hundred points in the Dow tonight. and anyone that's got bearish on the open today is just kicking themselves. And people will trade like that day in, day out. They trade through fear and guessing the market what it's doing, as opposed to actually watching what it's doing and reacting to, what the charts are saying, what's playing out on the charts. So we go to the ASX. I mean, that's still in an uptrend. It's hard to argue. Well, you could argue with me if you like, but I would assume that hard to argue that this is not an uptrend. We had a good, pretty negative open. We had that sort of push downs from the highs at 68, 62. Again, it's from what day did it start? That's the 19th, the 27th. So that was just after Christmas. So it could have been holding that. It's just on thin market. It's popped down, but that's still holding those high lows. So really, that overall structure is bullish. It has touched on that 68, 62 a few times now. So if it can hold here and it gets up through 68, 62, great. Then we continue on. We have a good trend higher before we have some sort of reaction lower. But the key levels really at 68, 62, and somewhere potentially around 66, 60 thereabouts. If it can hold this trend up, build another high low, it could be a high low coming into play just here. It might just tip a bit lower the next day or so and then react back up again. But if it starts to trade down to 65.93 and it's breaking out of this, then we start to be concerned that this is a serious resistance zone and no one's going to want to be pushing it through there. When if it gets up there, you can have more selling pressure coming in. Does that make sense? But until that happens, we're not trying to guess that that's going to happen. I mean, if you're a bearish personality, you might be guessing that and you're selling out and then it bounces straight through and takes off and you're kicking yourself. If you're a bullish person and it just tips over from here and you expect it to bounce, then it's the same, just in reverse. You can't guess, you just got to watch. I mean, we've got our levels marked up. This is a key level 65.93 and 68.62. I'm just watching what the price action is doing in between. But either way, these major indices are still looking quite good. Is that it? The DAX, I mean, the DAX itself too, you've got a key level around that 12.950, holding the trend up. That trend is still high. MAs are up. It's come into a all-time highs around that, say, is at 13.525. This level up here, it's just starting to run out of steam a bit. But there's no reason this can't chop sideways. I mean, I like to look at the stochastics. As you'd know, when it gets a bit overcooked, try to see what's happening on price. And once it starts going from overbought to oversold, if the market's going sideways and holding up, it means they're soaking it up. The selling pressure is getting soaked up. There's a number of buyers still happy to jump into the market, which means once that selling pressure eases, that's going to head higher. If you start getting the market tipping over like this, that's a different story altogether. It's just sellers versus buyers, as simple as that. The number of sellers versus the number of buyers. So we'll keep an eye on that. And we've got the UK, the FTSE. Yeah, I mean, it's still quite bullish. We had this little pop up off these lows at around 71, say key support around 7100, high low build at 7150. It blasted up through these highs. That was on the back of, I think it was the votes, wasn't it? What's his name? Good old Boris winning the elections and a Brexit. There's finally some certainty, I guess, for the companies over there. What's going to happen? Where they can start investing in their companies or not. To what direction it's going to head. Stay in the EU or not stay in the EU. At the moment, I think by the end of the month, he's promised they're going to be out no matter what, deal done or not done. So I think it's going to be, we've got another month, just nearly close to a month, 3/4 of a month left for them to figure out what's going on with Brexit or to make a deal with the EU for the exit. So, yeah, I mean, that's still, to me, longer term, it's probably better on the weekly chart. That's kind of bullish because you've got this, if anyone doesn't know the way we're looking at things, you've got pop up here, you've got the high, big clean out with this push through, took out a few of these lows, straight back up to the high, retest, took out the high as well before we had a deeper correction. So that's kind of uncertain. It washed out the high, can't continue. Okay, it's going to wash out the most recent low, which is down here. Wash that out, pop back up. Some sort of, this could have been a lower high coming to play, could have led to, attack down at this low at 65.31. But instead, it got soaked up through 7,000, sorry. So once it got soaked up through there, that's your higher low, which for me, And this is just that leg up, I think. That initial leg up, if you project that out, it's taken us up towards 82, thereabouts. Another 600 points away. So there is potential that the FTSE has got a 600-point rally up its sleeve coming. And that would, that's not going to happen if the US starts crashing and global market starts crashing, but there is potential that that could happen. We may need to have a pullback, retest this breakout at 74.50 before we start heading higher. But either way, longer term, that's looking quite good. And it's all because of this key major high low. So yeah, I'm not completely bearish in the market, as you might guess. I think there is a lot of potential still. And this fear that's going around at the moment about a war and stuff, yeah, it could just clean out, squeeze out a few of the weak hands, you'd say, squeeze them out, put them on the sidelines, and then if they see it breaking through into new highs, they'll be chasing that higher. And there's a number of people, the bulk of people can do that time and time again because they're not really, they're more reading, they're trading from news headlines as opposed to trading from charts and trading from price action and what's actually happening in the market. You can't hide, prices can't hide what's happening, whereas a news article can. It can be biased one way or the other, and it's no good just reading bits and pieces or getting too fearful of what's happening in the markets when some charts are telling you something different. I mean, gold has kicked on quite hard. There's a number of gold bulls around, I guess, willing to jump into gold at any chance they get, which is great. So it could be opportunity. I'm just waiting for that. If there's going to be opportunity in gold, I'm looking for a pullback. Crude, same sort of thing. Equities are still pointing high at the moment. It may be, it may be very early days of a good pullback. We don't know, but until we see that, let me just go back to the XJO. Until we see that, let me just get rid of those. Until we see this sort of breakdown, I mean, nothing to worry about just yet. If this can hold up through here at 66.60 and start chopping around here, I think it's going to lift up through 68.62 or through the highs into new all-time highs. It's just a matter of, I mean, this can go each way. This looks like a flag. I don't know what you call it, flag, pennant, whatever, a bullish flag pennant because everything's up. But the same token, it's token 1, 2, failing again for a third time could easily lead to lows. So it's too early to tell yet. I don't want to be, you don't want to commit to being a bear or a bull or a bear yet until something plays out. Now, if we do, like I said, push down to 65.93 for whatever reason, because the US is falling apart, there's more war headlines, people get nervous, are locking away some gains in the US, because we've done nothing over that Christmas, New Year period, whereas the US has gone higher. They're higher than from when I did the last sort of set of stats prior coming into Christmas. So there could be people over there that obviously are sitting there going, well, look, I'm sitting on a wad of cash, a wad of profits. I haven't booked it yet, and they might start to look at booking it. But then again, we've been saying that for a while. So we'll just wait and see how that all plays out. Any questions there, guys? What is everyone else's thoughts on the overall markets? I think that's all I wanted to cover, and then we can get into some individual stocks. Just go. I want to see Crude kick on. I want to see that finish at 130 today with any luck. Let's get rid of that. Alrighty, we're all going strong. So we've got a couple of stocks to look at now. There's one on ALK. I don't know if anyone looked at the last, it might have been the last alert we sent out. I don't know how thin, I think it was ALK. Oh, I forget now. Bear with me 1 second. Holiday period. I think it's ALK. I'm just going to check because it's looking great. It might have been something else. AGG. Where's AGG? Oh, yeah, it was this one. So AGG was something I posted out just before. I mean, it looked great. That's a cracking chart, and it was down around the $6 mark when we looked at it. So what's that? 20%, maybe gains 15, 20% from that level when we alerted it. But the problem was, I mean, if you delve a bit deeper, and this is the hard thing if you don't get market depth and stuff, there's got no depth, and you can see the gaps. Let's just have a quick look. You see the gaps, price between here and the next price up, massive gap. And then, a bit of a gap here, another gap here between price. So you can see, I mean, I'm not, and there's next to no liquidity on the offer there. It is bullish, and it's a small stock. It's done 220 grand. It's not everyone's cup of tea, but you just got to be careful when you're trading these. What you just seen the bid and the offer, and it's up, 3%. The chart looks great, but can you get your liquidity out? And you don't care about on the upside. If you're in profit and the market's bullish, that's great. You can just stick a price on the offer, and someone, if it's going to stay bullish, it's going to go straight through it. But when you're running for the door with everyone else and there's no liquidity on the buy side, you've got to really, you could potentially get smashed. You've got to know what's on the buy side there. And that's why I thought I'd just pump out that alert, because just talking about the liquidity on the buy side, because we only care about risk. If we're going to enter a trade, don't care where it potentially is going to, because also that's just gravy. When you're winning, it's easy. But if you are trying to manage your risk on the way down, that's the thing we're concerned about the most. Okay, and that's what we want to protect from. So we don't want to jump in and find that we jumped in the high and then things, everyone starts unloading it. There's no liquidity to get out, and someone just comes with a big order, 100 grand to take out, could take out a dollar's worth of if they just start unloading on it, or if people start getting fearful and start hitting the bid, and just triggering this thing down. So I thought it's good idea just to remember something like that. But that is a cracking. I mean, chart wise, technical wise, it was a great chart. Great chart to watch. You had this market pushed up, got through 7, pulled back, tried to go again, couldn't go, but then it started getting back down to this level around 550, getting soaked up. Inside level here was a beautiful, you know, put your market up across the highs. Let's just do that. Mark that up across the highs. Here we go. You can see this level in here was just anywhere sort of in that zone after you've got, support through here. Beautiful. I love that try to set up every day of the week. It's a great setup. And you've got the markets pushed up. And if you can see, bar these pullbacks as well, most recent anchor was broken and then it got soaked up. So that's broken down. That's probably going to trigger a bit of selling, especially when you've got quite heavy selling down here. Once it chops around in here, that's going to trigger people to be getting concerned. If you bought it here and you haven't got out, you're going to be concerned because you're sitting on a loss. If you bought it here, you might be thinking twice about booking some profit at least. But what this does is churn people around. But you can see it gets soaked up. Here, 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 here. A lot of times it's looking a bit bearish there for a while, but as soon as it starts building that higher low and breaks out of that contraction lower, then that's your opportune area to get into. And you can see if you go and look at charts and just start marking up things like that, you'll see why it is, and you're not the only person thinking that, because it really starts accelerating higher. Could have been a trade, if you can see, here somewhere, but also here, the break of that high, probably on that green candle there. Yeah, that was a cracking chart. It's just that the lack of liquidity, I wasn't willing to put out a buy alert, even though it played out well. I wasn't willing to put out a buy alert, and then we got a few people in it, and it turns around and gets crucified because of the lack of liquidity. You want something with, more liquidity on the bids. So if you happen to get out, or if you happen to get it wrong, you've got something to sell into. You've got some liquidity to sell into. Okay, so what do we got? We got first one in OSH. Just take a look at that. Can everyone see the charts fine, or do I need to make it a bit thicker? Okay, so OSH here, kind of like that. That's probably, it's, to me, the week that daily's not too crash hot, but you can see it's pretty clear that this is a level that's been defended at $7. Probably best to go to the weekly. And there you go. It's ideally, it's actually quite good. John, have you got in that did you get into that, John? So the structure wise, we've had some buying through here and sort of through this zone. Okay, it pressed up, higher low, led to a good push up, good sell off. Okay, things have changed. Whatever the dynamics changed, there, got smashed down to whatever that level is, 660, 665. Lower high led to a further push down and retesting these lows. This zone through here, just clean that up. So It's a key sort of a buy zone right through here. Has been a few times. Right, let's press back in there. Reaction up. So when you were looking at it about this stage, when it starts selling off here, you don't know if it's going to turn to something like that, something like that. There's nothing showing you at all. I mean, fundamentals aside, technically someone's selling it. Don't care what the fundamentals are saying. Someone's selling that. Say just at this stage, we're just looking at these first few red candles, so there's no reason to get involved in that just yet. Okay, but then once you get it popped up here, it comes down. Okay, someone soaked it up. You know that because it bounced again. But again, at this stage, we could be holding a lower high. So it starts to come back down, but it gets soaked up again at around, let's just draw that up a bit clearer, around, what's this level? Just under $7. And then it's reacting back up. So as soon as we take out, you get this reaction back up and you take out this high to say around 750, heads up that this is going to be a key higher low. And if you start just go through the motions and draw it up again, to me, that looks quite good. You've got, all this work done previously at that level. And again, here, potentially here, didn't get down to there, but, low enough, close enough. And then again at this zone, getting bought up again, contraction down, key contraction, you got your higher level. They started to, not waiting. So buyers now, if they're starting to stack up and they're quite happy to start stepping into the market, it's a numbers game. So if there's more, there's going to be someone that's not going to be waiting for it to get down there. But if there's a lack of buyers and sellers are still coming in, you should see it trade back down there again because it's just a weighted numbers. Like I said, if there's more people wanting to get out than get in, that market should head down. But as soon as that's flipped and more people waiting to get in than get out, sooner or later they could be potentially just getting impatient. And instead of waiting to get down to 640, they're looking for it to get it, $7. They see it start reacting off 7. They go, bugger it, I'm not waiting. I'm in. I want to start, getting something at around 7 or start building a position 7, 720, 730 or so on. And then they see this kind of like day like today. And if you couple that with oil itself, potentially looking to higher levels, say $75, this thing could get a few legs. So 825, John's in it. I mean, even if it's a bit lower than where it is now, I'd be happy with that. I mean, you'd be happy to hold this. I don't know where your risk levels are and all that sort of stuff and how you're trading it. But I'd be happy to hold that because I think your first sort of level, what happens at 780, and you couple that with what's going on in crude at the time, it could be there very soon actually. 790, it's 20 cents away. 780, 790. This high here is going to be your first sort of port of call. What's happening there? You see the market's getting a bit extended, but that doesn't mean too much. So extended just means how much juice is left from the buyers to continue to push the price higher. If it's down, the stochastics are down at 20% and you're up here, okay, that's a different story. It just means that there's probably no sellers in the way. And if there's buyers want to jump in, they're going to have to pay up. So yeah, that's your first sort of level. See what happens here. And then after that, you've got 840 and then right up to 920. So that with risk, at the moment below 7. So if you've got that, it's 2 to 1. And if you can minimize that risk, on smaller time frames, I'm on the weekly anyway. I'm on the weekly? Yeah, I'm on the weekly. You can minimize that, with a stop up here, or even, if you get a high low building here, you can jump in looking for that move up to 850. But I think that's, to me, is looking quite bullish. Any questions on that one? I'll get into VIN EOS. EOS, I like to. The problem with this one, I'm not. This is it's sort of this last few days price action. I don't know how everyone else trades, but I know how I do. And if you can see what I'm looking at, that longer term, the structure looks great. It may be just running out of steam just here. So it'd be interesting. And it's only because, you got rejection here, good move up here, but it wasn't, there's no follow through. Then you got a red candle. Then you got all this sort of rejection up about 750, 60 zone. But on the flip side, you've got a bit of rejection on the other side. Today, so far, it's pressed down and popped back up again. So it is getting soaked up a bit. So it'd be interesting to see if it can sit on the MAs. I'd rather see, for me, It's just this last sort of few days, what's happening there. So it looks like you've got a few sellers coming in and a few buyers. So they're trying to match it out. So sooner or later, there's going to be that point of agreement and one side will win out. It's just which side. And I would like a clear setup for that. But if you look at the overall structure, you've got this kind of price action, it's popped down here. Lower highs have come into play. As I would rather see, just because it looks like that's to me is curving over. And if it's curving over from here, starting to curve over, it looks like it's going to have a bit of a pullback. And I'd love to see the pullback and then see what happens in that pullback. If that pullback comes screaming down here, then we have to readjust our resistance zone. I mean, there's no reason why it can't sort of pull back and then bounce off 67, 675, $7 and chop around. But I just want to see what happens on that pullback. It's, to me, obviously it's gone from oversold to overbought. We're running out of steam. Last time we're up there, we're up at this level. Okay, we're slightly lower than that now. So if you look at it there, you got to think. Last time we're overbought, we're at higher levels. So what's happening? It means that potentially there's some sellers coming in and want to take risk off the table for whatever reason. But there is some sellers coming in and they're starting to sort of jump in here. So again, that would be one. Even if this pops up through 775, I'll just start this again. Let me just give me 1 second. Cancel. Go away. It's more this last price action. If it pops up through this level here, say 765, 770, I still would find that a touch hard to trade because we're in overbought territory, because of all this rejection here, sell off here, pop back up, got rejected here. It's getting soaked up a bit. So maybe if you're gonna trade it through 765, you got your stop at 730. It's not big risk, but I think you just got sort of looking at it, thinking how much steam's left. I mean, no volume really on that move through here. It is the Christmas period too, probably. One reason why it's probably struggling with volume as well. But yeah, that's the way I'll be attacking it. I wouldn't mind to see that sort of pull back, see what happens, seeing it reset at sort of this 720, 730. See it resets a couple of green days, and then a couple of heat coming out of that move, and then see if it can rally with a bit of volume. If it can get a bit of volume on the way up, then yeah, that's, to me, it's saying that buyers are stepping in, it's looking to new highs, all that sort of stuff. It gets no volume. It just means that there's a lack of interest in it. So I'll be interested to see how this one goes. But overall, this major structure looks great. It's just trying to refine that entry, which is always the hardest part. It's easy saying something going up or down. It's hard. When are you going to jump in? When are you going to put your money at risk? So what was that one? EOS. So what was the other one? ALK. Another good one. Oh, pretty much for here. Ideally, all I would want to see. I mean, that looks great. The weekly's good. Sitting on top of the MAs on the weekly, so it comes down to the daily. And in the weekly too, gone from overbought to oversold. Oversold here. Last time it was sort of getting over, it was a lower level. So it's been smacked down by the sellers, but buyers are soaking it up. If the sellers are pushing it down, and that's how you're using the stochastics, pressure from overbought to oversold, that's good pressure on the downside, on the pullback, but it's not getting the previous lows. It means buyers are soaking it up, and they're soaking it up hard. Okay, so if that's the case, and we're going to hold this high low on the weekly, there's a lot of oomph to push it through 90 cents. It's just about the entry, and really, for that, I think it's quite good. I just want to see that what happens on the first pullback. First pullback gets soaked up, then yeah, I'd be willing to have a crack at it. For looking up through 85, you can see, this zone through here got through this low, but then got soaked up. All this sort of buying through just below that low. The selling pressure was still on. It's probably hard to really draw that up, but selling pressure got lower high here, lower highs, and it's always chopping below that low. People would have been going, I've had enough, it's not coming back. Coming into Christmas, all the fear driving the market a bit. And then the market, go away. Let me just get rid of that. All right, so what was I saying? So that there's just causing people to bail. It's getting soaked up, and it starts to lift. It's back above the MAs, which I would like to see. But I think if it can just pull back, hold that sort of 60, so you get a bit of a pullback, chop around here for a bit, and if we can do that, then you've got your risk defined with a high low, sitting back on top of the MAs on the daily, getting soaked up with a bit of a lift in volume, and then you pair that with the weekly, which is sitting on top of the MAs. Great, looks good to go. And then you've got minimal risk. You can have 3-1, 4-1 with a push up through 85. It can get through 85, and if it just retests it. If it retests and fails at 85 or even 80, you've got a 2-1 trade on your hands. So yeah, that's pretty good. I like that one. What was the last one? MVP. You're killing me. I hate MVP. I hate it now because I saw this happen through Christmas. So I've had a few goes at this one. I've held it years ago. I don't know. I think I bought it at average of 530, 525, sort of in this zone and above. And then I think I took some off here and then got smacked a bit with this move down. And I think I ended up a very minor gain. And we had another nibble at it recently, didn't we? I made a very minor gain on that again. With this little pop here, we got closed out. It might have been break even. I might have stopped myself out. I think we did it. Let me just check. MVP, the last time we had a crack at it was on 11th of the 7th, 582, 530. So we took a hit on that one. Is that right? We've taken a hit on that a couple of times on the alerts. I personally had that too. And then look at that. Bang, up she goes. So yeah, I hate it. But it's looking great. So anyone that doesn't know about MVP, they've got that Penthrox, and Davin and I have traded this quite a few times in the past, before we started having it as an alert, and then it's really doing well. I mean, their product Penthrox, a painkiller, non-opioid, if I can say that, um, has been doing really well, and they're waiting for the US patent. That's what sort of it was driving this higher, and then news come out that it was getting held up, all that sort of stuff, and it wasn't getting through there. And then you get this massive sell-off because that's what people are looking for, it to keep going higher. It got held up. We're expecting something to happen somewhere in 2017, 18, and then it's got held up potentially a year or two, and then bank gets sold off. But then in the meantime, they just kept putting on Europe, putting on US, all these other countries kept signing up to their product, and that's what's driving it higher. So now that you've got another year and a half later, there is potential that the US is going to open up the market, or they're going to open up the market in the US to Penthrox, and then you know kick on. But yeah, that's a cracking one. Couple of good entries here. Just it was hard to trade. You see this pop up, pull back, high low, push through $6, smash down through the high low, start to lift again. It was just a bit choppy, and it's got a history of doing that too, by the way. It's just on a bigger scale there. Push down through this lower high low here with this move down, settles, lifts again. So yeah, a bit of a choppy one, and it's thinly traded, even though it's up here. It's not. I mean, look at the bids there: 211, 397, 6 shares at 906, 905. It's kind of sparse as well. So yeah, that's MVP. Great company. I just don't like trading. Have made much money, probably next to nothing out of it for the last few years. So ABA, what's on that one? Kicking on nicely. Big flush. Look at that flush in 2019. Big flush down. Boom. High low here at around 525 and starting to lift now. Getting a bit stretched up here, and we're getting to this $6 level, which touched one, two, got through it here, touched again here, touched again here, a bit lower, a couple of times through 2018, failed again in 2019, just before we started to lift up through it. Well, through that level, straight back to $6 again. So it'll be interesting to see how that goes. Bit stretched for me. Again, I wouldn't be jumping on this train. Just I want to see what happens on the pullback. If it gets soaked up, yeah, it could be worth, as long as you've got small risk. Yeah, Oswald Bank. Yeah. What was the other one? What did you say? DCN. Yeah, DCN kicked off. See, weekly that chart doesn't look too crash hot. It was just sat on top of was it the 50 MA around here, which was this move through here. It started to get soaked up. So if you could have got some of that with risk just below, say 130 thereabouts, yeah, great. A bit stretched here. It could be just let's close that gap. maybe it's just a push to $2 is on the cards. We'll see. All right, might call it a day there, guys. Any questions on anything else you want to quickly look at before we shut down for a week? Market's still coming back a bit, down only 25 at the moment. Crude's hanging in there above 120. MSB's bounced back a bit, so we raised the stop on both of these, which is good. MGX still kicking along nicely. That's kicked on over the Christmas period. That's looking good. I think that could just be a nice, good trend high. I would love to see something like this over time. I want to see if it can start getting ahead of itself and start to really kick on the upside. If that's the case, we could be looking at 120 soon with any luck. Yeah, so the ones that really hurt me the most are the bloody blue chips. Everyone talks about you've got to get into the blue chips. They're the ones that are hardest to make the money in. We've got TCL, which has just been struggling. It starts to kick on, boom, a couple of days, it gets smacked around. And CBA the same. We're down on the two ones we're down on, the biggest ones. Everything else is making some money for us, so all good. BPT, oh, what's that doing? That's an oldie but a goodie. Yeah, good, solid uptrend, isn't it? You see the volume easing off as we get up to the highs, so it'll be interesting to see how that goes. All right, call it a day there, guys. XDiv, I think I bought it just after that. When it went XDiv, I've got a feeling. Anyway, the proverbial happens, doesn't it? It's part of trading. All right, guys, thanks very much for joining me. Any questions, send through an email to support@tradesetup.com.au and I'll get back to you. Otherwise, have a good couple of days and we'll speak to you again next week. If there's anything that untowards happens during the week, the way of the market, a bit of a meltdown, then might have a random stream or a morning like we used to do. Did with that one in the morning just before the open of the ASX. It's just not too. It wasn't really worth it. Not too many people on. But if something happens, I might just do one, just a bit of a heads up. So just be on the lookout. If something happens, we might jump on, have a bit of a chat before if things kick off too bad or too hard. All right, guys, enjoy the rest of your day, and I'll speak to you next week. Cheers. Bye.